very few people have the mental wherewithal to say, oh, I'll put in a stop in after I do the trade, because we always are second guessing ourselves. They're going to gun for my stop. I know the market's going to reverse after I get stopped out. So that is a key point that we bring out, and something I've used in my career. This was a P&L of the traders. These are all the fundamental and technical analyst traders. And they would do a P&L each month. And you could see, although my name's last on the list, I had the highest P&L for that month. And that was strictly because of Candlesticks.
So 1996 to like 2026, we're talking 30 years here. Do the candlesticks that were in your original books, do they still have validity? Do they still work? Are you still using them? Are you still seeing them perform? All right, folks, here we are on Trading Up. We've got one of the legends in the house here. We've got Steve Nison on the show. He's been around for years. He is essentially the father of candlesticks. So if you've seen candlesticks before, this is the guy that brought them to the Western world. Welcome to the show, Steve.
Thank you. It's great to be here. What time is it there? Like 4 a.m?
No, it's 7:30 in the morning. So it's pretty.
Oh, okay. Thanks for getting up early for the interview. Huh?
Yeah, it's not too bad for me. So it's fine. Hey, look, start off with, let's go all the way back. What first got you into trading, and how did it all sort of pan out to the point where you ended up coming up with candlesticks and bringing them to the Western world?
Well, just very briefly, back in the 1980s, I was working at a brokerage firm, and there's a Japanese broker working down the hall, and I would talk to her once in a while, and she had this voluminous book on her desk, and I noticed the cover. It was with at that candlestick charts, and I said, "What is this?" And she said, "Oh, I get these shipped to me from Japan all the time. They're called candlestick charts." And I said, "What?" And I never saw them. So anyway, I worked at Merrill Lynch and D.F. Hutton and Shearson. These are all names a lot of your viewers and listeners probably aren't familiar with anymore. But my job is giving trade recommendations to the brokers. And back then we had something called the hoot and holler system, where you'd pick up a phone and all the major offices around the country and the world would just listen to your voice, and I would give trade recommendations in the financial futures markets.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So anyway, I figured this was something interesting. So I spent literally years going through all the literature. In fact, I have a slide here. This is my desk when I was first doing the literature. And you can see there's just some of the Japanese books I had translated. I paid somebody a lot of money to translate these books into English. And the middle part here, all these pages are the English translations of the Japanese books. So after it took about a year to translate, then a year for me to put it all together. And then I started to use these strategies for my trade recommendations to the brokers. I did not let the brokers know. I was a technical analyst, by the way, at these shops. And I didn't let the brokers know that I was using candlestick charts because I didn't know how well they worked. And after I got really comfortable using them, after I started to be really confident in how I applied them, I would get results like this. This was a P&L of the traders. These are all the fundamental and technical analyst traders. And they would do a P&L each month. And you could see, although my name's last on the list, I had the highest P&L for that month. And that was strictly because of Candlesticks. So it kind of validated their usefulness to me. And then I decided to write a book about it. And from there, it just became more and more popular. There was one charting service that used it early. And then me being pretty good at marketing, I got in contact with the competition. And I said, well, this charting service is using candlestick charts. Maybe you should think about using it. And they slowly shifted over to it. And of course, back then, the only source of how to use the candlesticks was my book. So
it was one of the biggest ones, wasn't it? Like in terms of people just saw it as a bit of a Bible. I think there's a couple of others out there. But That was
It's
one of the
amazing. Yeah, it's been translated into 21 languages, including the most obscure language, Brooklynese. In Brooklyn. No, you're not going to get that over there. But in the U.S., when you come from Brooklyn, you talk like dem there and din there. Yeah. So,
yeah, again,
but yes,
yeah, I get it.
it's been translated to like 21 languages, and still a really good seller. And I've written a couple of other books, but now our education is more online. We'll give a link later, but we have one-to-one training, we have webinars, we have lots of education. We have software and all that. I used to do, when I started my company in 96, I used to only do the education and the consulting services for top tier financial institutions, Morgan Stanley, hedge funds, market makers, and so forth. But after 2000, when the market collapsed, I was only working with 7 or 8 companies on an ongoing basis. They merged or went out of business. And luckily for me, and hopefully for the rest of the trading community, that's when internet trading became very popular. So I shifted my attention. I said, given these secret techniques to the institutions, why not get them available to the general public? So in fact, they were so popular when I was doing my financial institutional stuff that the Federal Reserve had me speak to them, because they said so many of the financial institutions are using the candlesticks. They want to know what the heck's going on. So that was interesting.
I suppose what's quite interesting is so 1996 to like 2026, we're talking 30 years here. What do the candlesticks that were in your original books, do they still have validity? Do they still work? Are you still using them? Are you still seeing them perform?
Yes. And we'll go over some of the important aspects. You can get information about what the candlestick line is on the internet, but just because you see a candlestick signal doesn't mean you should trade on it. There's a lot of nuances involved, which we'll go through a little bit later. I made some charts together, but I did should I show, should we have the basic construction of the candles, or do you think your audience knows it already?
Let's have a quick look for anyone that's kind of brand new.
Right. And then actually I can go into one of the nuances just to show you how, yes, you may know what a candlestick line looks like, what a doji looks like, but it doesn't mean you know how to trade with it or invest with it as well. So candlestick line is made of 2 components. There's a rectangular portion called the real body. And depending on your charting service, most of them now are green. The close is higher than the opening. So the bottom of the real body is the opening. The top of the real body is closed, if it's a green, or white, depending on your charting service. And the lines above and below the real body are called the shadows. And if it's a red real body, that means the opening is up here and the closing is down at the bottom of the real body. And the shadows are the same thing. It's always the high of the day and the low of the day. And one of the reasons beside those early reversal signals you get with candlesticks, that they've become so popular so quickly, every charting service that I've seen now anywhere in the West is a candlestick chart, is because it uses the same data as a bar chart, open, high, low, and close. So any of the Western techniques that your viewers and students are looking at, moving averages, trend lines, oscillators, they can use them with candlesticks. In fact, I strongly advise them to do so because the more signals you have coinciding at the same point, the more likely a reversal.
Now, we talk a lot about strategy and mindset here on the Trading Nut podcast, but that doesn't really matter unless you've got the right environment to trade in. So if you're struggling with a prop firm, then I recommend checking out our partner, propfirmmatch.com. These folks have got a massive database of prop firms, got them all verified there with customer reviews. It's completely impartial and transparent. It's worthwhile checking them out. There's a coupon code and link in the description that's going to help you save some money at checkout too.
So, and the candlesticks have been used in Japan since the late 1800s, and it's amazing that really nobody in the West really knew about them. So they're actually older than bar charts. The candlesticks before the candlesticks, the Japanese used to use bar charts, but they shifted over into the early 1900s into the candlesticks because you get visual representation of who's in charge of the market, the bulls or the bears. The lines to your right are called doji, and the plural doji are doji, so my translator tells me. And a doji is an equilibrium between the open and close. And if you get a doji, and there's a very common misuse with candlesticks. People think if you see a doji during a rally, that the market's going to go from up to down. That's not the case. What's happening is that there's a balance of forces between the bulls and the bears. And that means the short-term trend has gone from up to neutral. And it could trade sideways for a while, but it doesn't mean it's a reversal signal. And what I did was, again, most of your students understand the construction of the candles. I'm going to show you an example of how, what I call candles in context, where you could have something like a doji and you trade very differently on it. So, for example, here we have a couple of doji. This was in crude. Now, with these two doji, I would not be negative. Yeah, there's the red and green real body, but they're so small they're considered doji, and so the market's in balance. Also, these long upper and lower shadows. This is another thing that your students should be aware of. You could look at the shadows also and get a sense of what's going on. So here we have a long upper and lower shadows, and the market's confused. Anyway, in and of itself, I would not be negative here because the market's really making higher highs, higher lows, and higher closes. But look what it's confirming, a resistance area. So based on that, I would view these doji as being more potentially a reversal signal than if they were not confirming a resistance area. So this is what I call candles. It should be in context, not contest. You can have the same you can have the same candlestick signals, but where they appear in the overall market condition will really affect what you're going to be doing with them.
Yeah, I find the same as well. I mean, I think with candlesticks, and I do see a lot of traders who just purely trade them, and they, that it's a naked chart. It's just candlesticks. And for myself, I think it's almost impossible. Not impossible, but it's so much harder to understand what exactly everyone else is doing and where the confluence is, and whether or not your decision to go long or short is being backed up by the masses, which is really what you need.
Right. So I love your word confluence. That's perfect. A confluence of signals. Yep. That's
and
great,
I think, I mean, I've met a lot of traders through the show, obviously, and confluence is one of the things that I think doesn't get touched on that often, but it is probably the most important, and people just don't give enough weighting to it. And instead they'll just focus on a strategy and not really sort of think about the confluence. I mean, how did you go from, I suppose, taking this from institutional firms, this knowledge that you're passing on there, to bringing it to the retail traders? How did that transition happen?
That was pretty easy. And I say that because, well, I shouldn't say easy. I started my firm in 2000, and back then URLs cost like $150 each. So I just had a website, and pretty much I was the, expert on it. There's other books on it. And like I said, there's the internet, but I was the go-to person for it. So I went from having like 7 clients to like 20,000 self-directed retail traders very, very quickly. So I was lucky. It was the right time, right place with the right skills. A lot of life is luck, good luck and bad luck. So I happened to be there when the internet became popular for trading.
And so it was pretty much a cut and paste from the institution to the retail.
Yes, exactly. The main difference was for the institutions, I would go to their shop and do seminars. So, for example, Reuters, I don't know if Reuters is still even around. Reuters news service paid for me to do seminars around Europe. I did, I think, 15 seminars for them, and they paid me per seminar for some major institutions. But I used to go to like Chicago, in New York, and well, I'm by New York, so it's not a big deal. But I used to do hour and a half seminars for, back then they had proprietary trading, which they can't do anymore, prop trading for their shops. So that's where if they're not familiar with the term in there, it's when the shops would use their own money to trade capital. So I would work with their traders on that, but they don't have any prop trading anymore. Or the market makers, the NYSE market makers, for some of the stocks they were running, I would do consulting services for them. And I would do individual consulting. I would look over X number of charts for them, maybe 10 markets per institutional client. And this is when they had faxes. I'd mark up the fax and send them a fax. My my very quick funny story. Once I sent a wrong fax to one of the companies, and I emailed them. This was pre-cell phones. I emailed them. I said, "I hope that it doesn't cause. I sent you the wrong fax. I hope it doesn't cause you any inconvenience." And spell check kicked in, and it turned inconvenience into incontinence. So it said, "I hope it doesn't cause you any incontinence." So we got laughs out of that for many, many years. So, So with the retail side, it was pretty much web seminars and full day seminars at hotels and all that 1, 2, and 3 day seminars. We make back then we made VCR recordings out of it and convert them to DVDs, and now it's obviously streaming. And so now, like I said, we have a lot of other services.
I mean, look, I'm thinking, somebody turns up to a webinar or a seminar, whatever you call it, and they sit there, take notes. I mean, how, from your point of view, is it easy? Would you think it would be easy for somebody to take that knowledge that you've passed on to them and then just jump on a chart and start trading, or do they need to do some additional stuff to really embed this, what's being taught?
It depends on what level they want to get to. But our idea, like when we do web seminars, we try to give them enough information to start using it the very next day. We recommend maybe doing some paper trading first with this information so they get comfortable with it. But yeah, they could take, it's like the first slide I showed you. The idea is that even if they take away one nugget of information, that's going to help them with their trading. Like your idea with Confluence of indicators, which is kind of the same thing, with what we were saying. You take away 1, 2, or 3 good ideas, you could start improving your trading. It doesn't mean you're going to be able to incorporate all the ideas at once, but if you take away the key nuggets, you could start using it the very next day. And one of the things we really emphasize a lot is the idea of risk control. On that first slide I showed, I'm not going to bring it up again. I had the most losses of anybody, more of the traders on that P&L. But if you limit your losses, that's the name of the game. The idea is to be around for the next day. And one of the things we're very conscientious about is protective stop losses. My feeling is the way I did it is whenever I did a trade, or recommend a trade. One of the things we do give some trading suggestions in our member site is put a stop in as soon as you do place the order. Very few people in my experience, have the mental wherewithal to say, "Oh, I'll put in a stop in after I do the trade," because we always are second guessing ourselves. They're going to gun for my stop. I know the market's going to reverse after I get stopped out. So that is a very key. That's one of the key points that we bring out, and something I've used in my career.
Yeah, like this day and age, look, personally, always put a stop in, always same kind of risk, there or thereabouts, depending on what it is, futures or CFDs. So it's something you should be doing. If you're not doing it, then I think we've got a screenwriter actually asked that question. So if there were 3 things that you'd recommend somebody focus on around candles, what would the 3 things be?
The 3 things would be: get very comfortable with recognizing the candlestick signals, all right? And then remember combining them with your favorite Western signals, and then consider risk reward. Okay, those are my 3 aspects. Safety first trading. I have a cartoonist, because I don't want to worry about copyrights. So I had to make this one. And really, at the end of the day, risk is what it's all about. Knowing, setting protective stops, knowing if it's a good risk reward. That's really vital.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide. Okay, so I've got one last question here for you, Steve. So it's something in the back of my mind that I've been thinking around AI and the fact that they kind of are not humans. Everything that's been historically printed on a price chart has been driven by humans, right? So even algorithmic
It's being created by humans. Now you've got something that's possibly got its own consciousness, it's like sentient, whatever. It'll come in here and it may create candlestick patterns that we don't understand or can't read as we did historically. Can you sort of give us a prediction as to like what might happen with candlestick patterns in the advent of AI taking over and actually placing trades on behalf of humans?
Well, look, I guess, the way I think about it, the candlestick signals would be the same, but they may not be human evolved. In other words, there'll still be a bearish engulfing pattern, but that might be because of AI decided to do a bear trade and form a bearish engulfing pattern. My thinking is, yes, it may be AI generated, but if people see the market collapsing through AI or rallying because of AI, people will want to be involved in it. They're not going to say, "Oh, my money's being run by AI. Oh, look at the overall market now. I want to get out." There's still going to be fear. There's still going to be greed. It may be generated by AI, but I think those emotions will still be in play. But that's an interesting concept, and hopefully I'm going to be long dead by then, so I don't have to.
Yeah, well, I'm just wondering
worry about it.
Maybe the AIs will actually kind of not necessarily change the way price action works, but manipulate the market to things that they want to happen to the point where they get control of the world. I don't know. I don't know where it's going, but anyway,
Yeah,
you and me may be long dead by the time that this happens. Hey, look, Steve, it's been fantastic having you on. What's the best way
Thank you.
to find out more about you?
Yeah, okay. And we go to this link here. Sorry about that. Yeah, right over here. As a thank you for your students taking the time, because we all have limited time. We have a lot of free resources. They go to this link here. This way they can continue their education. I hope they pick up a couple of just important, a little bit. We didn't have much time for many nuances, but the one or 2 points they picked up in our interview today, hopefully it'll help them. Check out the free resources. And we also have a gift for those who want to get started. And you can contact Paul at candlecharts.com to find out the best products and services for your specific needs.
Cool. And folks, if you can't see that, if you're listening to this on the podcast, then it's candlecharts.com/welcome. What we'll do is we'll put a link in the show notes for you to grab there. All those other links for Steve as well. And whilst you're there, hit subscribe and like and that notifications bell. And then we'll see you in the next one. And Steve, thanks again for coming on.